Welcome back to BitcoinDorks. Today, we're diving into some concerning news as a seasoned analyst predicts a significant downturn for altcoins, forecasting a potential 40% drop in prices. Let's unpack what this means for the cryptocurrency market and what investors need to be aware of. A seasoned analyst has sounded the alarm for altcoin investors, warning of a potential 40% drop in prices across the board. This prediction has sent shockwaves through the cryptocurrency community, raising concerns about the stability and sustainability of altcoin markets in the face of mounting selling pressure and market uncertainty. While the exact rationale behind the analyst's prediction may vary, it's crucial to understand the broader market dynamics and factors. From regulatory crackdowns and market manipulation to investor sentiment and macroeconomic trends, various forces at play could contribute to a significant downturn in altcoin prices. The prospect of a 40% drop in prices is undoubtedly concerning for altcoin investors, especially for those heavily invested in the market. Such a downturn could erode gains and lead to significant losses for investors who have not adequately diversified their portfolios or managed their risk exposure. A widespread sell-off in altcoins could have ripple effects throughout the broader cryptocurrency market, potentially triggering a downturn in Bitcoin and other leading digital assets. This scenario highlights the interconnected nature of the cryptocurrency market and the importance of monitoring market trends and sentiment closely. In light of the analyst's prediction, altcoin investors may need to reassess their investment strategies and risk management practices with a heightened sense of caution. While it's tempting to react impulsively to market fluctuations, it's crucial to adopt a more measured and proactive approach to safeguarding investments. One strategy for altcoin investors is to diversify their portfolios across different asset classes and investment vehicles, spreading risk and minimizing exposure to any single asset or market. Diversification can help mitigate the impact of a potential downturn in altcoin prices and provide a buffer against market volatility. Investors may consider setting stop-loss orders to limit potential losses and protect their capital in the event of a market downturn. Stop-loss orders automatically trigger a sell order when the price of an asset falls below a predetermined threshold, helping investors manage risk and avoid significant losses. While the immediate outlook for the altcoin market may seem daunting with the looming prediction of a 40% price drop, it's crucial for investors to maintain a nuanced perspective and consider the broader trends shaping the cryptocurrency landscape. While short-term volatility and market corrections are inevitable in any emerging market, they often serve as catalysts for long-term growth and maturation. In the case of altcoins, which represent a diverse array of projects and technologies, it's important to recognize that not all assets will be affected equally by market downturns. The cryptocurrency market is notoriously volatile, characterized by rapid price fluctuations and speculative trading activity. However, amidst the short-term turbulence, there are underlying trends and fundamentals that can provide valuable insights into the long-term trajectory of the market. For instance, the growing adoption of blockchain technology across various industries, the rise of decentralized finance, DeFi, applications, and the emergence of non-fungible tokens, NFTs, as a new form of digital asset ownership all point to the increasing relevance and potential of cryptocurrencies in the broader economy. Additionally, regulatory clarity and institutional interest continue to evolve, providing further legitimacy and stability to the cryptocurrency market. Moreover, while the prediction of a 40% price drop may sound alarming, it's essential to understand that market corrections are a natural part of any asset's price discovery process. Altcoins, in particular, often experience rapid price appreciation followed by periods of consolidation or retracement. These cycles of boom and bust are driven by a variety of factors, including investor sentiment, market psychology, and external macroeconomic conditions. While short-term price movements can be influenced by speculative trading and market manipulation, the long-term value proposition of a cryptocurrency is ultimately determined by its utility, adoption, and network effects. Therefore, investors should focus on the underlying fundamentals of the altcoins in which they invest, rather than being swayed by short-term price fluctuations or sensationalist predictions. The prediction of a 40% price drop should be viewed as one possible scenario among many in the dynamic and unpredictable world of cryptocurrency markets. While it's essential to acknowledge the risks and uncertainties inherent in investing in altcoins, it's equally important to recognize the potential rewards and opportunities that they offer. Altcoins represent a diverse spectrum of projects and technologies, each with its own unique value proposition and use case. From smart contract platforms and decentralized applications to privacy coins and stable coins, altcoins encompass a wide range of innovations and functionalities that have the potential to revolutionize various industries and sectors. Additionally, the cryptocurrency market is constantly evolving, with new projects, protocols, and technologies emerging at a rapid pace. While some altcoins may indeed experience price declines in the short term, others may continue to innovate and grow, capturing market share and increasing their value proposition over time. Therefore, investors should approach the prediction of a 40% price drop with caution and skepticism, recognizing that it represents just one possible outcome in a complex and dynamic market environment. Some altcoins may indeed face significant price declines, while others with strong fundamentals, active development teams, and robust communities may weather the storm and emerge stronger than before. Therefore, investors should approach the prediction of a market downturn with caution but also with a keen eye for opportunity. This may involve conducting thorough due diligence on individual altcoin projects, identifying those with strong value propositions and long-term growth potential, and strategically allocating capital to mitigate risk and maximize returns. In conclusion, the prediction of a 40% drop in altcoin prices serves as a sobering reminder of the volatility and unpredictability of cryptocurrency markets. While challenges lie ahead, investors can mitigate risks and capitalize on opportunities by staying informed, diversifying their portfolios, and maintaining a long-term perspective. That's all for today.